Hi there guys, thank you for logging on tonight, this evening. Very murky weather north of the border and south of the border, I believe, tonight in the UK. So thanks for sparing the time this evening and looking to learn more, all by way of Knightsbridge Trading Academy. So thank you very much. We're just waiting for one or two more to trickle in and then we'll kick off. If you've got any questions, guys, please see the chat section just below the handouts. We'll go through that later on towards the end of the presentation. And then if you've also, you can see the question section, and we've also got two polls tonight, which us here at Knightsbridge Trading Academy, we just like to find out a little bit more about you and what your aspirations are. So we've got two polls running tonight. How long exactly have you been trading for? So have a good think, exactly what do you want, not just from tonight, what do you want going forward, going over the next few weeks, months, and potentially years? What do you want to get from trading in general? And also, do you have any aspirations to join a financial institution, potentially, albeit professionally, at some point in the not too distant future? Please let us know. So select one of the polls and please jot that information down. Okay, so I think without any further ado, I just want to get going. I'm quite excited tonight, as it's my first speaking slot for Knightsbridge Trading Academy, and hopefully it will not be my last. Hopefully this is the first of many. You'll be logging on each week for the best analysis and research out there in the FX world, which I truly believe. And yes, we've had a lot of emails in the build-up to this first webinar with many first-timers or many beginners or novices in the FX world feeling rather confused and feeling rather, just bewildered in the FX world in general. And yes, it's a minefield. It's a bally minefield, if you don't mind me saying. And if I was starting off now trading myself, I honestly don't know what I would do. And that's genuine, even me. And I've been trading over, well, nearly over 18 years. I first started trading when I left school, and that's my background. So what I'm going to go into some more detail about my background. First off, when I did leave school, I started trading stocks. When I went to college, I left college early because I was trading quite a lot, and I was actually able to live off my income at the time. And I traded through the dot-com bubble. Now, a lot of so-called gurus or experts out there, some of which actually message me, and even to this day I say, well, how long have you been trading? And they say, well, a year, 2 years, some even say as low as 6 months. And I don't believe that you can be an expert and teach others with full confidence in that short space of time. Yes, you can learn a consistent method, which is what you're going to do. This is what we're going to get for you in a short space of time, just a couple of months. You can really learn. But then to go on and teach others and profess you've been, a professional in the industry for quite a while and only really have a moderate experience is pretty damning. So this is why people are lost out there, people like yourselves, and why I would be starting out as well. So just so you have a little bit of confidence. I'm the analyst at Knightsbridge Trading Academy. I've traded through, as I said, the tech boom and bust of '99 and 2000 in my college days. I built up a lot of money and lost a lot of money. Then I traded up until the 2007 rally and property rally and 2008 devastation in the markets, and then on there we've had a great period trading in between, and I've been fortunate enough to trade for a hedge fund with quite substantial capital, and I've traded through the dizzy periods of 2015 and 2016 where we've seen unprecedented events, like Brexit, the Donald Trump election, and who saw all of that coming, right? So, but to trade in between all that and mega events, which, certain things won't ever happen again, certainly in our lifetimes, and to trade through them and actually be consistent and still remain in profit and still know what trades to take and what trades to maybe leave aside is what it's all about. And that's what we're going to go through over the next few weeks and months. You're going to learn precisely what you need to do to really stay afloat and to really become a trader. So going on from here, I'm not just saying this albeit August is a fairly quiet month, so it's probably the best time, I'd say, to start dipping your toes in before while everyone else is still away on holiday. You can really start get a little head start, if you like, before everyone gets back, and then you're sort of in the driving seat, and you're hitting the ground running as soon as September comes around. But volatility will increase then into the end of the year, and there's going to be some great opportunities where we are right now into the end of this year and into 2018. And I'm really excited, trust me. I was this excited this time last year, and it didn't disappoint. Neither did 2015. So it's been, it's been very good indeed. So we've got a lot to get through. In the meantime, I just want to run through a few things on the chart. So at the moment, we only show our real trading accounts for actual members. So the members who are following, for instance, trading signals, who have the Infonox accounts themselves, and also the attendees and members of the Institutional Trader Program, things which I'll come to at the end of the webinar. But in the meantime, I just want to go through a few currency pairs and just show you some, small examples, potential examples of what you could be looking at to trade very simply, and also what's happening right now in the markets. It's not a great deal, but we'll get other days are more volatile and more busy than others. Now today we've got nothing really crazy. I mean, we had the South African rand, which we don't trade. That could have presented some problems because South African President, I think Zuma, survived a no confidence vote. That doesn't really present us with anything. Please check out the training videos as well that they'll be sent out very soon. And this is where I go through setting up your chart and going through each important announcements and learning how to pick them out and what to wait for a release, in which case you can then go on and trade just after. You want to price those moves in, so do not trade around fundamental data releases, high important fundamental data releases. So okay, today in general, guys, let's go through this year. So really we've seen cable come down through 130, haven't we? And again, I've got a private message, I believe, just some people asking how I set up my charts like this. Again, guys, please note that this is all in the trading videos, and you will be sent these trading videos very soon. So please note that you will get to know indeed how I set up the trading charts from scratch, and also what I look for in terms of economic fundamental data. Okay, and the website to go to for that as well. All that is in the first training video, and the first of many, I may add. So again, please don't forget the polls, guys. How long have you been trading? And also the other one as well. So please let us know. Okay, so let's kick off first with pound dollar. Where are we now? The pound dollar. If you've been trading this, if you actually got a pulse or have not been living in a cave for the last 12 to 18 months, or 6 to 12 months even, you'll know that the pound dollar has been through the absolute mill. Okay, now just to give you an example, and again you'll learn where to get this information from as you move forward and gain a relationship with us. The percentage of traders net long is now its highest since July the 25th. Now that's the start of the summer holidays. That's not long ago, it's just over 2 weeks, but it's exactly 2 weeks. And yeah, all the traders net long is now at its highest since July the 25th, since cable traded. That's the name for pound dollar, since pound dollar traded near 130.29, and currently we're just below 130, aren't we? So what we've got here, we're just sold off earlier today down through these moving averages. Now I will give you an idea. I'm not going to tell you the setup of the entire chart, that's on the training videos, but the moving averages that I've got here are indeed 18, 55 and 110 moving averages. And we saw a sell-off down below 130, again a psychological level, a massive round level for cable, and this has been a psychological level ever since Brexit. Now if we go back as far as June on the charts, June 2016, you'll see that huge moves were seen down below 150. We topped out at 150, guys, before Brexit. It's absolutely crazy, isn't it, to think back where we were. And it's, it was 2,500 pips from its high to low. Well, actually a lot more, 3,500 pips, but roughly to where we are now. And sort of the Brexit time, we were in and around, as you can see, 130. I'll just make a note of that. So you can see the 130 level here. This is indeed where we were, where we found some support just post-Brexit, and then we sold off down through that crucial level. And as soon as we sold off down through 130 convincingly, below the moving averages, we saw a huge sell-off down towards 114. And invariably we came back, and we've tried to make ground back up towards that 130 level, and that's been the target for the last few months. So this is why 130 on cable is a huge psychological level. And I speak to, again, other hedge fund traders in the industry, and they clarify the importance of the 130 level. So when this rallied up through 130 not too long ago, just in the last couple of days or in the last week, I thought, right, interesting. Okay, this is interesting. Let's see what it can do. But I wasn't convinced, because you know why? I like to see the market spend a lot longer above an old psychological level. I don't just want to go long the market if the price has just got above a huge psychological level, one as big as 130 for cable, just for a few days or just for a few hours even. I wanted to consistently sustain gains above that level. And this is what has happened since the Bank of England announcement last Thursday, may I add. It sold off back below 130 here on the 4th, actually down to 130, and then it's hovered in and around this 130 level. So the 130 level, you can see precisely how much support it's given the market. A huge drop off from 130, 150, 150 point sell off. And it pretty much stops dead at 130, doesn't it? Just above 130. And it's held here for another 2 trading sessions, Friday and Monday. And then earlier today, it dumped below. So it's not a real convincing sell-off below 130. It's 129.85 right now. But again, this is no reason to really go short. There is actually nearly a short signal pending, but that's for our signals strategy that we have for people interested in that. There nearly is a short signal pending on that, but not quite. But neither would you want to be long right now. There's no confidence, it seems, above 130. Neither does there seem the reason to really aggressively sell just yet. So we want to clarify there's certain points we're looking for, especially the team that deals with the signals. There are some about another 2 out of 4 checkpoints that we want for cable to reaffirm a bearish signal below 130, and one of which is the length of time it now remains below 130, and that's that. And then we will decide to possibly go short pound dollar. All right, so what else are we looking at here? I'm just going to go through 3. I'm going to go through euro dollar, then dollar yen. That's all I'm going to go through, okay? Okie dokie. And then we'll move on to some other things there. Right, so again, guys, don't forget the poll. If you're in, please just let us know how long you've been trading for. It really helps us to help you. We want to know what your experience is, just because, everybody's different. We don't want to put everyone in the same group, because there might be someone who's not traded a day in their life, never set up a trading account, and there may be others that's traded 10 to 15 years. So, or 20, 30 years plus, who knows. So we really want to decipher the novices, if you like, from the sort of intermediates. And again, you can still be lost even if you're an intermediate or even a professional. I know plenty of professional traders out there that are still bewildered themselves. But you follow a concise trading plan that is consistent and consistent throughout all market conditions, you will not go wrong. Okay, so euro dollar, like cable, it's one of my favorite trading pairs. For instance, it's the most liquid trading pair, euro dollar. It's the most, what that means is the most liquid trading pair. It's the one currency pair that contains the most trading volume. So you can easily get out of a euro dollar trade, or you can easily get in. You'll never be stuck holding a euro dollar trade. Even at very low volume times, you will probably be able to get a liquidity provider to provide a price for euro dollar, and the same when you get out. It might not be a great price, but you'll still be able to. But generally, 99.999999 to the power of infinity % of the time, you will be able to get a good solid spread, excuse me, on euro dollar and be able to trade it as and when you like. So euro dollar is the most liquid trading pair in the world. Okay, did someone mention Bitcoin then? Please don't swear in this room. Yeah, I'm sure there'll be opportunities to trade that on MT4 pretty soon as well. Anyway, so euro dollar, quite like cable. Again, very simple. Obviously, we're trading against the dollar, so it's just euro against the dollar as opposed to pound against the dollar. And sometimes they trade in sync, and they correlate each other and complement each other very well. Just like on Thursday after the Bank of England announcement, euro dollar sold off wildly. So it was 118.75, you know, close to that 119 barrier. So 119 is basically for excuse me. So for every euro, you've got $1.19. Pretty much that's what that means, if anyone's not too sure there. And again, for every dollar, you then have got, sorry, for every euro, you then have $1.1865, $1.1842, and as you keep selling off and selling off, you then come down here, you've got $1.1720. So you can see how these moves are quite large. You know, if you've got a substantial amount of money you want to convert, that's a decent gain. That's a decent variant, isn't it? From 118, let's get that up. From 118.85 all the way down to 117.20, that's 160 pips. Now, if you're converting $10,000 or whatever, 10,000 euros to dollar, that's a decent amount. Decent amount. You know, it's 150 pounds. It's a decent amount of money, isn't it? So you want to be aware and be on top of these moves, guys, because it, you know, even just dealing in cash and going on holiday or whatever, it can still save you money. Not necessarily make you money. Sometimes it can, but it can definitely save you money. But this is what we're talking about with trading. Getting on top of these potential moves are absolutely very, very lucrative indeed. Now, there are certain, one of our signals service recommended recently was a euro dollar sell, and it done very well, obviously. The moving averages, I'm not telling you exactly what the makeup of a signal is, but I'll give you a clue. We've got certain moving averages clustering here. We wait for certain other indicators to show its face, but here we took a sell-off just before the announcement in Bank of England, and we saw a substantial sell-off here thereafter. And again, down to that 117 support. 117 is a large support area. And these are our pivots here. And as you can see, the market recovered from that 117.20 area and then got up towards the 50% retracement line. This 50% retracement line, it is Fibonacci as well, but it's also one or two other things that are combined in there. So it's not fundamentally solely Fibonacci. So this 50% line here, you might think, well, what's a 50% retracement? Basically, this 50% retracement is the 50% line of this move here. Since the new week was started here on the 4th, for the pivots, that is, it changes every Thursday. On the Monday, on the 7th, the early hours of the 7th, so it was the end of the week. This closed late Friday and then late Sunday night, early Monday. As you can see, the pivots just not lining up. That's a new open. So every week these pivot levels change, if you can see. So that's why they're different. They don't follow on precisely. The pivot levels are just changing. Let me go back to the end of July, a week previous, and you can see them there then. See, so the 28th of July, that's where the pivots, again on the 28th, just about do not line up again, do they? So they move. They open at different levels the following week because trading different prices and the volumes and averages all change week to week. So then new pivots have to be priced in a different way the following week to factor in price levels and price action. Now, this is why I love these pivots and these moving averages. Obviously, our guys with the signals, they take into account a lot more things than this. This is just one example. They take into account as well things like MACD, RSI, a few other indicators themselves. This is just my basic chart that I use. Now, this market got back up towards the 50% line and the 50% of this drop. Now, the 50% of this sell-off from 118.85 from the low of 117.20 was indeed this line here, the 50% at 118.18. The market just failed at that level, absolutely nicked it 2 or 3 times. It's probably it's a double triple top, isn't it? At this point, over a 10-hour period, the market really did try to get through the 50% level, failed, sold off through the moving averages, and bounced perfectly off the 61.8% level as well. So just like we've got a 61.8% level on the upside, the 61.8% retracement level on the downside was perfect support. So now going forward, it's times like this where you can say, right, okay, going forward, if there's a buy-in indicator at a certain price, I'm not saying there is in this instance, but if there was to be one around 117.30, 117.35, you would want to put your stop below the 61.8% area, purely because you know it's already supported itself. It's bounced perfectly off that area, having already sold off aggressively down towards that zone. It's bounced off perfectly. So any signal going forward from here, you definitely want to put your stop loss. Obviously, if you're buying, you want to put your stop loss lower than the current market price or your current entry level. So you'll look to put it below the 61.8% level at 117.15. Just to have that extra safety and that extra buffer. And that's it. So pretty simple, right? Right, dollar yen. Let's look on the dollar yen. Last but not least, dollar yen. Let's check this out. Dollar yen, again, not as volatile potentially as euro dollar and pound dollar, but again, one of my favorites to trade. Get great spreads on dollar yen, even with Infinox as well, offer great spreads on dollar yen, specifically these 3 pairs, euro dollar, pound dollar, and dollar yen. Great spreads, Infinox, again, I trade with them and I find them, excellent in their, with low slippage, on practically next to zero slippage. And often, sorry guys, just lost you there. Yeah, as I said, Infinox again offering next to zero slippage, and yeah, the great spreads as well that are on offer. So again, dollar yen. So unlike euro dollar, this is what I wanted to put. I wanted to put something converse here. So unlike dollar yen, sorry, we're on dollar yen. Unlike euro dollar and pound dollar cable that we've just looked at, in and around the Bank of England meeting on Thursday last week, this was at midday UK time, guys, dollar yen surged. So whereas we saw pound sell off dramatically against the dollar, we now see dollar dramatically rising against the yen. Okay, now typically this, well, it does mean it's a strong dollar, but also you've got to look at the other pair involved, which is yen, Japanese yen. So it doesn't necessarily mean it's a strong dollar. It actually kind of is in this case because the spike is an actual real push higher. But also the yen is the second, well, the second currency, the world's reserve second currency, if you like, next to the dollar. So typically, if there is a lot of confidence or there's just been a big announcement and there's a lot of flow, a lot of cash flow into the dollar, often the yen will suffer because the two do trade. They're not mutually exclusive. So you've got safety in numbers with dollar. When that suffers, more than likely yen will gain, because we've got a flow out of dollar and into yen. So you'll then see yen gain, and thereby you will see dollar suffer against the yen and the dollar sell off against the yen. But in this case, we've seen, you know, a reprisal in dollar after trading mediocre over the last few days. We saw it just clambering out in and around the 109.90, 110 level, and as it got up towards and surpassed 110, again a nice psychological level, it pretty much took off, didn't it? Just like Apollo 13. We all know what happened to Apollo 13. And we hit the 38.2 retracement line and bounced off perfectly from it. Unbelievable. It's like as if it knows where to touch, and then you've got the high institutional traders that come in and say, right, okay, that's enough. It's rallied enough. Get the hell out of here. We're pushing that back down. You know, look at that, 38.2. Come on, I mean, it's just beyond, isn't it? It's just so obvious. That's the green line there. Obviously, the level slightly changed for this week. 38.2 resistance. It's now just below 111. But up until that point there it was. So dollar yen has had a great reversal. It's come back off and meandered in and around 110.70, 110.80, and since sold off. And again, look at this for 50%. We were looking at the 50%, weren't we, on euro dollar just now. Look at this, sold off perfectly and bounced off 2 bars. These are 15-minute time frames, guys, okay? 15-minute time frames. So for 2 periods of 15 minutes, the price tried to get below the 50% line, and would you believe it? No, it didn't bloody succeed, because the 50% line held as strong as an ox, and then it sustained another rally up towards that 110.80, this sort of trading full volume zone, high volume zone. And again, since then, meandered and sold back off towards this 50% line. Now, very interesting, right? When you break these charts down, first it just looks like a mess, doesn't it? But again, you break them down into sections, it's not that difficult, really. And when you break these up over time, it's just a case of zoning in sections of the chart. Just look for 1 week periods at a time, and before you know it, you can actually look at certain scenarios where you can almost see where the market is probably leaning towards, and the volume and the fundamental data that sometimes complements the moves even before the moves have occurred. So something to keep an eye out for. So again, we've got yen has been a good performer this session. This is what is popping up on one of the feeds. But obviously, again, it's always vulnerable to the Federal Reserve speaking in the US. So whenever yen is doing well, you have to be aware of when the Federal Open Market Committee, the FOMC in the US, when they are due to speak. So again, please refer, guys, to the first training video. That will be sent out to you very soon indeed. Please, it's 15 minutes. It's longer than most of them are going to be. All of them are going to be between 8 and 10 minutes, but this one is 15 minutes long, and it's just getting a bit of an introduction going, setting up your charts, and telling you exactly what to look for in terms of the calendar, and the calendar that I look for on a specific website. And do not trade before those announcements. Simple, just before. So for instance, if I was now looking at trading right now, if I wanted to sell dollar yen at 110.37 or 110, say, I tell you what, say for instance the market sold off below the 50% line. Now this would be not a signal by itself. I must stress, this would not be a signal by itself with just this one checkpoint, but it would be something to look at and pay attention to. And if the other checkpoints, we saw a tick by them as well, then we'd get in and trade. But if the market was now seen, as we saw great support at this 50% line, we've seen the market trade aggressively up through and now push the market higher, and we've seen it hold as solid as a rock, just like Fort Knox there at 110.25, just below 110.25. Now, if it was to sell off down below, you could say, well, this is finally broken as support, so this could be a good indication you were going to sell. And if you decided to take a sell on dollar yen, we've actually got a buy running at the moment on. It's only a test. Say this is a test account. We often test different strategies, so we're looking at dollar Swiss. I'll come back to that in a second. And I might let you in, if you're lucky, I might let you in just for 2 minutes to tell you why I might have taken that trade. So dollar yen, if we sell off down below 50% line, again, you'd want to put your stop loss back up towards a higher level, maybe 20, 30 pips higher than where you enter. Again, we work off a 1-to-1 base ratio more often than not always, but more often than not. You look to gain 30 pips, and you'll put a stop loss of 30 pips, or you look to gain 20 pips, have a stop loss of 20 pips. So your risk reward is precisely even 1-to-1. That's all that means. And if it was 2-to-1, then you would look to having a stop loss at 10 pips, and you were looking to gain 20 pips. You were looking to gain twice as much as you were looking to risk. Okay. Now, so if you were looking to get in as a sell with dollar yen, and for instance now it's just gone 10 to 7 UK time, if this was 7 p.m. UK time and the Federal Reserve at a meeting and they were about to discuss interest rates, and interest rate announcement was due out at 7 p.m. UK time from the US, that could monumentally move dollar. So dollar could potentially go crazy. Look at what it did after the Bank of England spoke. Now, if the Federal Open Market Committee, obviously it's not the Bank of England that determines rates in the US, it's the FOMC, and if that was to go against what the market expected, the dollar could go crazy. It could then bounce off 50% and fly back up to 112, bursting up through all the other pivots. Or it could indeed sell off dramatically down towards 109, but it could spike first on initial announcement, purely because the first 30 seconds to a minute, or even the first 5 minutes of an announcement, the market doesn't absorb. It takes a few minutes for the market and all the participants to really absorb the information. So why on earth would you, just 7 or 8 minutes before the announcement, take a trade in the denominated currency that the FOMC rates will primarily affect? Absolutely not. You must be balmy. Please don't do that. Right, so you would wait. What I would do, I would wait 5 to 10 minutes, and I would say, right, you know what, okay, it's sort of, yeah, they've kept rates on hold, things look fine, average hourly earnings pretty much the same, yeah, okay, and dollar yen doesn't really move, but it still tweaks below the 50% line and kind of keeps going. I like to wait about half an hour for things to really be soaked up and to really be confirmed that that announcement is history. And then if that was the case, then yeah, jump on and carry on selling the bugger. Why not? But again, just a little hint of not to trade just before announcements. And I do run through that in one of the training videos as well, as I said, but also setting up the chart, which for me, in your own trading, is, if you want to do that, fair enough. If you don't, no worries. That's what I do myself. That's all I'm saying. And okay, what should we end on? We're just going to, I'm just going to look at this dollar chief trade, and also any questions as well. Again, I want to see the results of these polls. I want to see what you are, what levels you're at. If you're completely brand new, no problem at all. That's great. In a way, sometimes it's better. Sometimes it's actually better to start afresh, and I know it's kind of a cliche, maybe you'd have to say that, but I firmly believe the less sort of products and services you may have tried, sometimes it's better because you've got less of a blanket, of that murky trading blanket, shall I say, that I like. That's my analogy. Thinking, right, okay, well that said that, this website says this, that service said that, and you can't take, well, you can take bits from each one, but you can only really go with one and sort of think, right, no other distractions, I'm going with this strategy works, it's proven, it's consistent, I'm going to stick with this and this only. And sometimes when you're more fresh, it works better. Sometimes, even if you've got, you know, years of clowning around, placing with different services and different accounts, but you just want to start afresh, have a spring clean and go, right, done. That's it. Now I'm starting afresh. So either way, it doesn't really matter. Okay, so Dollar Chief, here we are. And again, I'm going to just hint at why I like this trade. I liked it because obviously dollar right now is looking strong. Okay, dollar's sort of back in favor. Okay, overall, as I said before, and we're in, again, it was a very small trade compared to the equity, so I'm not got any stop losses on right now, but I'm going to show you where I will put those in and where I'll put my take profit. I've been saving this just right. I knew it wasn't going to go any more than $1,500 against me by the time I got to this point, so I didn't really care. So we got in at 97.51. Now this level here, 97.51, is just here, just earlier on. So what I liked about this was the market, again, had a nice rally up through the moving averages, hit precisely the 61.8% moving average. And again, guys, going forward, if you ever used certain pivots, you'll see certain pivots getting hit and bouncing off them more than others. Sometimes more pivots are frequently sought after than others. It's just how it is. And it's sold back off. Now, what I like about this, the 23.6% pivot seems to have held strong, and the market has sort of bounced back higher. So I like that, and that's where we've sort of got in. And this trade wasn't on the radar earlier on when it rallied up through the moving averages, so that's why it wasn't taken then. But again, one or two other points wouldn't have ticked off anyway. So, but it's where I'm kind of liking this trade. So where would I put my stop loss? That's the main thing. Now, I'm only looking to get around 20 pips. I'm looking to get back up towards where we were earlier, towards the 70s, up above the 50% retracement. So what I'm going to do, I'm going to edit, click edit. If you've got an Infinox account, you simply come down here on your order line, you highlight it, left click, then right click, and modify or delete order. Oh, 1 second, let me get back off there. Don't know what happened then. Let's try that again, shall we? Okay, so I want to 97.51 was the entry. Let's get that back down again. It's going a bit skewy. Apologies, guys. Okay, 97.51. So I want to look down below the 0% line. Ideally, I'll look towards the next pivot line for my support, and if indeed it came off down towards this pivot line, there's a good chance it will bounce off this pivot line and then carry back on higher. Now, if my stop loss is just a little bit below it, just above the 26 level here, 97.26, that's around 97.27. Here we are, 97.26.5. So 97.26.5. So 97.26.5. I'm in at 51. Let's go at 97.20. What do you say? Let's go 23. 97.23 for my stop loss, and then 51. So a bit of maths for you guys. 97.23 from my entry at 51. That's 28 pips. So for my take profit, we'll add on 28 pips to 51, which is 79, isn't it? So 79 will be the target. Now 79, it didn't get us that far before. It got there, 71 it touched. So what I'm going to do, I'm going to reduce it slightly. Okay, I'm going to bring that down towards 70. We'll get that back to where we were because it's still looking strong, and we could easily burst through the 61.8% line. So if this is only showing you how you would play stop losses 1-to-1. Okay, so if I'm looking at here, 97.70, that's 19 pips, isn't it? Let's say 20 pips. 97.71. I got in at 51, and below that is 31. So that's just there. And that's just on the 110 moving average. Still above the 0% line, but again, it's looking strong above the 18%, 18-day moving average, above the 55-day moving average. It's an upward projection. It's looking good. Upward momentum. That will do me. That's what I'm looking at. So this is 2020, remember. Okay, so we've got 71.31. So stop loss. $97.31, take profit. $97.71, and we're in at 51. So 20 pips either side. That's what we've got. That's it. So we've got our red dotted line there. That's our stop loss. Here's our entry here, the green line, the green dotted line. Here we've got red dotted line, stop loss, green dotted line, entry. We're just above entry right now, hence why we're 17 buckaroonies in profit, and we've got the target just below previous resistance. So indeed, if we go back and target 61.8% again, but still fail it and don't get through there, we'll still touch and bank our profit, because our take profit is just below previous target and previous resistance. So just in case it doesn't break through 61.8%, we'll have our take profit just below that line. And there we are there. So that's a 1-to-1. We're risking 20 pips to gain 20 pips. Now, guys, it's 7 o'clock. We've gone a little bit over. We did start a few minutes later to allow some other attendees in. I did promise 1 or 2 by private message I'd wait for them. No problem at all. So that's pretty much that, guys. We're going to be going through some different things on Thursday. Please be here for that. And yes, let me just check out quickly. Again, the polls. Please make sure you fill those in. And also the handouts. We've got a few things going on. Again, you might need to log in a few more times before you check them all out. But again, we've got our Trading Academy there and the Institutional Trader Program. Again, if one of the poll questions are, do you ever see yourself taking things further regarding a financial institution? So, for instance, if you want to join a financial institution or trade for a living professionally, then please do let us know. I think in this modern era, I don't know why you wouldn't. But you might have great careers anyway and just want to trade for fun or even just a part-time income. Absolutely, that may well be the case. Who knows? So please let us know. Other than that, again, the handouts, please check those out. They're obviously the Academy signals that are provided, and again, the Institutional Trader Program, which is phenomenal. And I know people that have done that and go on to have great careers, 1 or 2 of them. And again, from very ordinary backgrounds, very ordinary jobs, the people that have gone on to do the course, which is not very long at all. So more information about that. And please feel free to go through the Infonox account brochure and the LSE final brochure as well. Other than that, guys, please, any feedback you've got, more than welcome. Email for any questions as well. The training videos are out shortly, just free videos, just very good hints. They're going to be over the next coming weeks and months, just telling you what to look out for and what to potentially avoid. And just generally keeping yourself on your toes, because sometimes you can go stale when trading by yourself. It's a lonely environment out there. It is. It's bloody lonely, and I felt very lonely some nights. I've been at home in front of the TV with a laptop out, and I thought, you know what, my partner's been away, my young baby's been away, she stayed at her mum's or something, and I think, it is quite lonely. sometimes, I've not got those sort of work colleagues to bounce off, but, the other things that come with it, the time you've got to do other things, I could definitely not see my daughter the amount that I do right now if I had a 9 to 5 job. I just couldn't do it. I wouldn't be able to, physically. And, even trading from holiday, we've got a holiday planned the end of September, just for a week, and, I'll take the laptop out, just check my charts, half an hour a day, maybe trading 20 minutes a day, so that's less than an hour a day I'll spend just trading, and that'll be my sort of work complete, if you like. But other than that, I'm here for any questions. I could do with a sip of water, actually, so I'm going to be getting on. And yeah, any questions you've got the email addresses. Please email support@ktafx.com, and you've got the other support there as well, other support email. Other than that, guys, it's been a pleasure, and I look forward to hearing from you very soon. All the best.